Philip DeFranzo,
Here.
Timothy Hodges,
Here.
Catherine McKinnon,
Here.
Commissioner Perez. Franklin Perry is unable to be with us this morning. Sarah Sanders.
Here.
We have a quorum in attendance for the meeting.
Thank you. So before I pass it to Ron to provide his 2021 audit result, I just want to just briefly provide like a summary of the 2021 audited financial statement. The summary, the memo that I provided to the committee is consistent to what the summary and the presentation I did for the board at the November meeting in connection with the 2022 budget. So when it comes to the 2021 production, we did over 1,100 of single family mortgages. And for multifamily, we produce and finance over 970 multifamily units. We issued 5 series of bonds totaling $1 billion, and we use a portion of the bonds to refund about 641 million of outstanding bonds. In terms of our position, bonds payable, it did decrease to 4.5 billion, and that's primarily due to the asset runoff that we experienced due to COVID. In terms of one of our big expenses, which is pension liability and OPEB, or other post-employment benefits, for 2021, it did reduce by approximately 5 million across the board to 64.9 million for pension and 77.3 million for OPEB. Overall, our operating income was about 40.1 million. Now, I do want to note the reality is the net true income is about 24 million. And the reason why the number is much higher is because there was an adjustment made to our loan loss reserve. And we did that because when we went into 2020, we did assume a much higher reserve to account for COVID. But when we got into 2021, we realized that in terms of our asset, it was actually performing much better than what we anticipated. So there was that adjustment made to the loan loss reserve. So with that, I would like to hand it off to Ron to talk about the 2021 audit result. Another year, another clean audit. So I want to thank the staff, the team for getting all the information together for our external auditor. And I also want to note that this is going to be our final year with Clifton Lawson Allen, CLA, as the successor to Shapiro, because the auditor has acted as our auditor for the last 6 consecutive years. So Ron, take it over.
Okay. I'm not sure, is the slide deck that I had provided going to pop up, or
yeah, so you just
okay.
need to Lorraine is going to scroll through it,
okay,
and then you just let her know to move forward.
I'll let you know.
Yeah.
All right.
Okay.
So yeah, so I guess, yeah, first and foremost, as Hazim just indicated, this will wrap up our time with you. I have been with the authority 6 years. It's been a great relationship. I've appreciated it and enjoyed it very much. Sad to be moving on, but then again, I'm only 2 years away from retirement, so I guess you got to move on, so one way or another, right? So from a results perspective, the audit opinion is an unmodified or clean audit opinion on the financial statements. Okay, here we go. Oh.
Lorraine, move it to the next few pages.
There you go. Okay, right there.
Right here?
Back one. Yeah, back one.
Okay.
Perfect. So just to go over, okay, so the engagement team, it remained, relatively consistent over the last, I think, 4 years, actually. So I have been the engagement partner or principal for the 6-year period that we've been with you. So that was still the case this year. Our director, Jessica Aniskoff, she's been on the engagement for 6 years, and Avery is the supervisor. I think this would have been her 4th year on the engagement. So we were able to keep the team intact and you know, leverage off of the institutional knowledge that we all had gained over the time with you. Our national reviewer, who was out of the Baltimore office, was Heather Plitt. I think I had said in the planning, this was our first cycle through the audit under a little bit different audit methodology, which was CLA audit methodology compared to what Bloom Shapiro's methodology was. I hope and believe that those changes and modifications were somewhat, if not perfectly seamless, relative to the folks at CHFA that we had to deal with. But there were some changes that we needed to deal with, and certainly that national review process is far different than the concurrent review or partner review that we used to undergo at Bloom Shapiro. But we made it through it all, and we issued in accordance with the timeframes that we had agreed to. So we're here now just to go through those results. So if you want to jump up one slide, the primary audit opinion, so pages 1 and 2 of the financial statements that were issued, is an unmodified or clean audit opinion relative to the financial statements. So it's basically giving you our opinion that the financial statements are fairly represented and fairly represent the financial position and results of operations of the authority for the fiscal year ended 12/31/21. Under governmental auditing standards, we're required to report to you any internal control matters that come to our attention relative to financial reporting. There were no findings that were required to be reported, so there's nothing that reached the level of a significant deficiency or material weakness. And then under, if you want to jump the slide, we also are performing work under federal single audit and state single audit. Under federal single audit as well as state, we issue an opinion on the compliance on major federal programs and or major state programs that fall under the federal single audit in this case. And then we also issue a report on internal control findings if there are any. So in the case of 2021, we issued unmodified opinions on the major programs that were tested. I'm providing you the 2 programs that were selected for testing for 2021. So they were both COVID-related funding programs. It was a little bit of a challenge early on because the federal government was extremely slow in providing guidance relative to what audit procedures they wanted performed over a lot of the COVID funding. But those things finally did come together late in 2021 and even bled into early 2022. But we had it all under control by the time we had to sit down and go through the procedures relative to those programs. So again, unmodified opinions on the compliance relative to those programs. And there were no significant deficiencies or material weaknesses relative to internal controls over the compliance requirements of those programs as well. And then if you want to jump again, this is the state single audit results, and same results, unmodified opinions. There were actually 5 programs that are state funded that fell under the state single audit for fiscal 20 or for the calendar year 2021. But again, all were unmodified opinions, and there were no significant deficiencies or material weaknesses relative to internal control that we needed to report there as well. So that will wrap up the reporting results, if you will. The next few slides, I'm not going to go through those topically, but you can kind of just roll through them. They're basically the audit areas, so where we break down the engagement either by account balance or transaction cycle, and the procedures we performed and the results of the performance. It is in summary form. It's not getting into granular detail as to exactly what it is we did. But in all cases, there were no findings or instances that caused us concern or caused us to modify our planned audit approach, other than there's one I'll talk to you about in the final communications, but it was nothing of major consequence relative to what we needed to do. But there was one instance that does fall under the categories that we would have to report to you relative to required communications. So you can jump through. I think this is like probably 4 slides of all the audit areas. If you have any questions when I wrap, I'll be more than happy to take them relative to the audit areas, or if you have questions after the fact and would like to reach out, certainly by all means, if you give me a holler, I'm going to pick up the phone and we'll go through any questions you may have. So the required communications, and we've gone through these, or I've gone through these with you before. They're really they're designed to present to you, in most cases, instances where management might be exhibiting some bias relative to the financial statements, meaning they're trying to make them look better or perhaps look worse than they actually are. One of the primary areas that management could manipulate financial statements is relative to its estimates, because it isn't, they are judgmental. They are in fact estimates. So we're providing you with what just the significant estimates in our mind were that are embedded in the financial statements. So clearly the loan loss reserve is a significant estimate, and there was a change to that, as Hazim indicated earlier. The net pension and OPEB liabilities are estimates. Those, however, are not estimates that contain as much risk, because those numbers are being driven by a third-party actuary that we can rely on under professional standards. And then the estimated fair value of the swaps, and that also there is a third party that's doing the valuation that we can rely on under auditing standards as well. So really, while all 4 of them are significant, the one that would be subject to bias, if you will, would be the allowance. We pound on that pretty hard in our audit procedures, and we were comfortable with where it was set as of the end of the fiscal year. If you want to jump the slide, and I'll go through the rest of these communications pretty quickly. Significant or unusual transactions, we would be required to report to you anything that was out of the ordinary or unusual in our mind, just so that we were comfortable that you were aware that it transpired. There were none. Difficulties encountered in performing the audit. We did not encounter any difficulties in dealing with management in performing or completing our engagement. Uncorrected misstatements, there were none, and I think we can jump to the next slide. Corrected misstatements, we did not identify, and management did not notify us of any. So there were nothing that we encountered relative to our audit procedures where we had to present an audit adjustment to management. Disagreements with management, and these would be gap related, meaning we had a difference of opinion relative to the application of generally accepted accounting principles. No such disagreements arose during the audit. We do request and obtain a representation letter from management prior to issuance of the financial statements. For those of you who are involved in the audit process in any manner, either inside of CHFA or outside, those have gotten more and more robust through the years, but they are a requirement relative to audit evidence at the end of the engagement. And matter of fact, if we were unable to obtain it, we wouldn't issue the financial statements. But those were obtained as of March 24th, 2022. Management's consultations with other independent accountants. To our knowledge, no such consultations occurred, and we would report to you if they had. What this basically is surrounding is if management disagreed with us in some manner or fashion and went to another accounting firm to seek a second opinion, they have every right to do so. So the act is not anything of concern, but it is required to be reported to you if it did occur, and clearly here it didn't. So if we jump to the next slide. significant issues discussed with management prior to the engagement. Basically, what this is telling you is that we speak with management on a regular basis, but none of those conversations and none of our conclusions were dependent on us being hired as the auditors. So there's no undue influence going on either way. And then the other audit findings, this is the issue I referred to earlier. For whatever reason, and this actually is a first time relative to the audit here at CHFA, some of the third parties that we seek confirmation from relative to the interest rate swaps did not reply. We usually we'll send three. We'll send an original confirmation request. We'll send an update or a second request, and we'll send a third request. Rarely relative to investments and cash and those types of accounts where these institutions are getting confirmation requests all the time, do they not comply with that? But for some reason, whatever the case may be, we did not get responses. So we had to alter our planned procedures relative to the interest rate swaps because of the fact that that evidential matter did not come back to us. There was, there's plenty of options relative to what we could do and what we did do in order to gain the level of comfort we wanted in order to issue our opinion relative, in that case, to the fair market value of the swaps. So it didn't, it didn't cause us any heartache or concern, but it is a requirement that we report to you that did occur. And then I think there's one more slide that basically captures the fact that, and this is in our opinion as well, that a lot of the other information that's in the financial statement or in other reports that we've issued, this just basically spells out what our responsibility relative to that information was. So in certain instances, we're not providing an opinion. We're stating that in our report. So that is going to wrap up everything that I was going to go through with you here today. If you have any questions, as I said, I'm more than happy to take them now. If you have them after the fact, then just reach out to me and I'll do the best I can to respond to them.
I wanted to comment, we've sometimes had problems getting swap valuations because those swap desks are pretty arcane in some cases, but sometimes if you have an investment banking relationship, you can shake the tree. But I assume, I know Hazim and Bob would have tried that, but just a suggestion, and Hazim or Bob could call the banker and get them to respond.
Okay.
Yeah.
Yeah, that was, I'm sorry, it's Tim Hodges. I was going to ask, actually the same question. I know that you indicated you reached out, but was that just by email or were there actual calls to the third party?
I can check with Jessica. I believe the originals go out electronically. The first reminder would go out electronically. Our policy, if you will, or our standard procedure is the third go around is a call. But I can confirm that. I wouldn't want to tell you right now definitively that took place and find out I was wrong after the fact.
Yeah, no, I appreciate that. I only bring it up because I know that we receive those communications as well, and sometimes they get lost or overlooked, and you don't see it until the second time or someone actually reaches out personally. So
yep,
it just might be an oversight. Thank you.
Yeah, yep. I used to work on swap desk, and generally it's typically going to the ops people, and they're going to ignore it to Sarah's point, unless somebody who cares about the relationship makes it happen. So but I had a question again, and Hazim, congratulations on the audit. Not much to ask here. It's an extremely clean audit. Just for my own clarification, with respect to significant estimates, not only are you relying on third parties for the pension liability and OPEB, but it's not even, that's really all just driven by state ERS system, right? I mean, so there's really no, on any of that component of the audit, it's really not CHFA. It's all just driven by the state. It's just a pass through, really.
That's correct. There is an opinion issued by independent auditors relative to how they break out the components of the pension. So what CHFA is getting, what Green Bank might be getting, those allocations, there is an opinion on that. But for the most, and we do rely on that opinion as well as the actuary, but you're absolutely correct. There's really nothing influential that management of CHFA could do.
Right. And then also I just was a little confused about the accounting standards used. It's not GAAP, not GASB, but general GAAP. I wasn't familiar with that. There's some reference in your summary that's GAAP, but they're not GAAP or GASB for that matter.
GAS is generally accepted auditing standards. So that's AICPA that drives that drives the procedures and methodology that we have to follow as auditors. GAAP, as you're indicating, be it driven by FASB or GASB, is the accounting, not the auditing. So AICPA oversees the auditing, and GASB in this case oversees the accounting.
All right, so is GASB. I guess, and the last thing, can you just talk a little in more detail about the wire transfer tests that were done for integrity?
Sure. So what we're for the most part looking for, clearly, for the substantive evidential matter relative to if a $10 million wire transfer was booked in the general ledger, that it was actually $10 million that moved. So that's the substantive piece of it. But what we're more interested in testing is the internal controls relative to those transfers. So were the right authorizations in place, where they indicated that they took place? So we don't have just one individual who can oversee and who can initiate and institute a wire transfer. So we want to see that it's getting approved through some level of control system or chain of command to protect the authority in this case from there being an unwarranted transfer taking place.
Right.
And
so
I
that's
think,
for issues of making sure that you have proper authorization. But is the integrity check also look at procedures in place to protect the authority from just purely external third-party fraud? Right. So the sort of, like, not so much making sure someone's saying a wire out that they shouldn't, but rather making sure that while a wire may be duly authorized internally, the instructions itself are fraudulent because the external party with the wire is has been compromised.
Well, we do track. So right, there's account and routing information relative to those transactions. I'd have to get deeper into the work paper, Jerry, and I can reach back out to you and give you some better level follow-up relative to all of the attributes that we're looking at. But I know we do look at what was the cause of the initiation. So what is the request? Where is it coming from? Where is the information relative to who is asking for this transfer or why it's taking place? And then we track that it actually did go to that account, to the accurate route, if you will. I suppose I want to check this, but if it, nothing is 100%, right? There could have been a fraudulent request and all the right steps took place and the transaction still consummated. Can
I just chime in, because I know your folks, when they were doing the testing, were looking at the setup or the change and modification of existing suppliers, which would include the change in wiring instructions, making sure those were properly vetted and signed off by the appropriate person at the authority. We do have an internal policy. If there's a change in wiring instructions and it's emailed to someone, that they're required to reach out to their contact of record for that vendor to ensure that those were indeed valid wiring instructions that were sent to us.
Any other questions?
Thanks.
Yes, I have a couple of questions. I have my hand up, Sarah, and one of them
Yeah,
is a follow-up to that. the wire.
Go right ahead, please.
You know, that there's auditing practices, and then there's best practices, and there are internal controls and all that. And if you ask me, they all kind of intermingle. And concerning wire transfers, in many instances, entities, especially for larger wires, have an agreement with their financial institution that if a wire hits a particular dollar amount, or all wires, depending on their appetite for risk, that the institution has to call back and designate a person to confirm all the major details, right? Like the routing number, that the right person, you know, approved it. Another way they do that is by a code, right? Do we do that in CHFA?
Well, we actually send standard wiring instructions that we use on a recurring basis, which would probably more so for our servicers. Those are sent directly to our trustee and signed off on by Hazim after they've been vetted. So once those are in place with our trustee, nothing can be changed unless we initiate it. So we wouldn't have to do this ongoing verification of these recurring wires, which are most of our wires, to the same vendor or the same servicer.
Because I could tell you that at least in the mortgage area, there has been some fraud, right? And when we get the complaint, and there was a particular one, there was a closing, and make a long story short, the mortgager company, the one that was doing the business, they didn't want to do the closing because they didn't get the money, right? And at the end of the day, we made the ruling, and they had to make the closing and eat the money because they didn't follow the procedures that were established. And one of those procedures was that they needed to go back and verify, you know, the information. So there's such a thing as best practice, which sometimes is not convenient for people, but like Ron mentioned, there's no 100% proof. So and even if you have a piece of paper signed by Hazim, he may not be the one committing the fraud or the redirecting, right? And because of cybersecurity, there have been instances where the third party, the back person, that entity, is able to intervene with that document, and it appears to the financial institution that all the right approvals are there. And my question is, you know, do we have any, and I'm not saying it's right or wrong, that's a conversation about risk, right? And we may determine based on our risk profile, that's a risk we're willing to take, right? So I'm not making a judgment on that is right or wrong, as much as I started the conversation clearly by saying best practice, right? And I totally agree that best practice sometimes means somebody else is going to have to do more work, and what an inconvenience that is, you know? So I was just wondering what our procedures were, and it sounds like our procedure is, as long as the phone goes out and has Hazim's signature on it, it's as good as gold. So if one day, you know, somehow it gets intervening, which has happened. The most famous case was the tunnel Torrington. That was over $2 million. That with the help of the FBI, we were able to get the money back. That if that procedure that I'm describing was to be followed, they would have caught it, you know? And I'm not saying that we have to do that now. I'm just saying, you know, part of our role is to discuss, you know, best practice and make a determination based on that risk profile. Is it worth it or not, you know? I want to go back now to the question about the confirmation. You know, I have not been an auditor in a long, long time, but when I first got out of college, you know, I did work for Governmental, and I did work in many examinations, including large companies like Aetna and others. And when we did confirmations, if we didn't get a response, we did one or two things. And again, I emphasize I have not been an auditor in over probably close to, you know, 25, 28 years. So procedures could have changed. We would either go back to the client and ask for the contract that they had with whoever it is that they had. So we could figure out who the contact person was, and we will contact them and say, we have sent this to you. You know, we appreciate it, especially if it's a large confirmation that we need it to be done. Or we go back to the client and say, can you contact your person and say, to have the proper person in their entity to respond to it. Does the auditor still do that, or it's basically you send a confirmation? If they respond, they respond. If they don't, they don't. Again, because it's convenient.
Yeah, no, it's if they don't we're taking action on that dependent on the account balance or area that we're testing. So for instance, if we were confirming 200 or 250 single family mortgages and they don't respond, response rates are projected to be pretty low relative to that. So we're already, by design, we're going to establish a cutoff relative to the timing of the response. And if we haven't gotten it, we're performing alternative procedures, because we can't wait till the 4 days before issuance and finally be getting some answers and wrapping up our audit procedures. Relative to cash investments, and in this case the swaps, we pursue those pretty aggressively. Again, I'd have to talk to Jessica and the rest of the team just to find out exactly what they did. I believed they worked with management, and I believe management was reaching out as well. But as was indicated by some others here on the call, sometimes you're just not going to get a response in a timely manner. And I can confirm this back with you, but we may have actually received something subsequent to our issuance from one of the third parties. But unfortunately, we're dating this report and we're getting these financial statements out relative to an established deadline. We had to move on and perform alternative procedures. We simply couldn't wait around.
So I would like to make a suggestion, which is really, I'm being politically correct by saying suggestion. I think we really should do this, which is to confirm that we did do the extra steps. And if we did, then maybe Haseen or the appropriate person writes to that entity who we pay a lot of money to, and we do business, and say under the contract, that's one of the things you're supposed to do. You didn't do it. And we will appreciate it that in the future you do comply with it. And if not, maybe consider a different vendor in the future. And I realize the swaps is not like you got 100 of them out there, right? I understand that. But at least we should go on record to tell them, this is part of your job. All vendors understand that entities like us get audited, and there's a confirmation process, and they need to comply with it. Now, at minimum, we should go on record saying that's unacceptable behavior through a letter to the entity.
Well, going forward, I'll be more aggressive with my follow-up with the swap counterparties, knowing that we could use alternative procedures. But let's not drown in a half a cup of water, because my point is not that swaps only, right? Meaning any vendor we do business with has an obligation to comply with that contract, right? Part of that contract is giving us information and giving information to third parties like auditors. And if we have anybody who doesn't do that after we do whatever steps we do, we should go on record saying that's unacceptable. And I realize that's going to require somebody to write a letter, but you know what? Comes with the job. And not everything in every job is glamorous and wonderful, right? So I really would like to know if we did do the extra steps, and if we did and they ignored us, we should really put them in record. And someone should get back to me, let me know that they did, and we're going to send a letter or we're not, because I really think that should be part of our procedures for all our vendors accountable. And I know in some people's eye, a swap company is not considered a vendor, but in my world, anybody you do business with is a vendor.
Commissioner, we'll do the follow-up.
Yeah, thank you, appreciate it. That's all my questions, or my points, whatever you want to call it.
I had a question. In terms of, I understand that there aren't any sort of significant issues that arose during the audit. However, do you provide any other sort of management recommendations to policies or practices as a result of doing the audit?
If something raises to the level that we feel as though it should or would be worth consideration, yes. We actually typically, by standard, you have 45 days subsequent to issuance of the financial statements in order to vet all of those issues and put anything in writing that you feel compelled to do, we would talk with management in advance of that. Because to be brutally honest with you, sometimes we draw a conclusion and we didn't have all of the facts, or there was some missing components relative to the fact pattern that would cause what we think is maybe worthy of communication no longer worthy of communication. I think in the past we've issued recommendation relative to the fact that some of those swaps are still LIBOR based. And we all know that's coming to an end, but management is on top of that. So there's, in our mind, in my mind, there's no reason to be continually writing a recommendation on something that management is aware of and performing their due diligence relative to addressing the issue.
Any other questions? So I think on behalf of this committee, I'd like to thank Ron and his team from CLA and the predecessor firm Bloom Shapiro for their work on this audit. And so Hazim, you said we need to change auditors next year. Is that correct?
That's correct. So the plan is to issue a RFP within the next few months. So our intention would be to provide a recommendation to the board probably in the early fall if everything goes according to plan.
Okay, we recently or last year changed auditors for the State Special Transportation Fund to CLA, and our prior auditor was helpful consulting with the new auditor in terms of not really work papers, but various procedures that they had done. So hopefully Ron and his team will help with the transition for the new auditors.
Right.
By all means.
Yeah. That and then Sarah, that is our intention, and that's part of the reason as to why we like to get it in front of the prior to the expiration of the current engagement, so that we can work with the existing auditor and then just transition over to the new auditor.
Yep. Helpful for everybody. Okay, any more questions on that? We'll move over to Allison Murphy, financial reports.
Good morning. Before you are the March financial reports. On the revenue side, mortgage loan and investment interest revenue are coming in 2.5 million below budget for the first 3 months of the year and 4.3 million lower than prior year. The revenue variances are being driven by the asset runoff, as Hazim had previously mentioned, and the fact that higher rate loans are being paid off and being replaced with lower rate loans. On the expense side, bond interest expense is below budget by 5 million through March 31st and 4.6 million lower than prior year. As I mentioned last month, during the month of February, we had made 79 million in redemptions. Many of those bonds were originally issued at a premium. Accounting standards require that the amortization of those premiums get accelerated when there are redemptions. So as a result, there was an additional amortization we booked in February for these redemptions of $4.3 million, which resulted in a reduction to our interest expense. In addition, the authority's outstanding bonds as of March 31st were $329 million lower than this same time last year. Administrative expenses are coming in 2.1 million under budget and 23,000 lower than prior year. When you exclude salaries and benefits, or 6.7 million, current year expenses are 546,000 lower than last year's expenses. So salaries and benefits make up a pretty large portion of the current year admin expense variance. CHFA is approved for 148 positions, and as of the end of March, we had only 128 FTEs. We're actively recruiting for about 7 positions right now. And lastly, the change in net position is above target by 5.3 million. Are there any questions?
Hi, it's
I
Jay
have a-
Abrams again.
I'm sorry.
Go ahead,
Joe.
go ahead, Commissioner. I'll have Steph for you.
I have a question. I mean, as you all know, every state agency has been hit by retirements and so forth, right? And the job market is very tough, even though we don't seem to have a problem getting enough people to apply. But one of the things we do is we pass out those job notices to as many people as we can and relationships that we have in order to cast a wider net, right? And also to improve the chances of a very diverse group of people in every sense of the word. Do you think it may be worthwhile considering some of the people you have in the board and the relationships that they have that you may want to pass on to say, look, we appreciate if you pass on to your network that we're looking for an accountant, we're looking for a loan underwriter, whatever it may be. And because, you know, I have relationships that you don't have, you have relationships that I don't have, right? And the backgrounds and clubs and places that we are members of may be the same, it may be different. And I can tell you that I have found it to be extremely helpful to, like, you know, I pass it on to Scott X, who happens to be the chairman of the NAACP, but I also went to school with his sister, right? You know, so, and she's the you know, the main person for government relations at a local health center, right? And you may say, what do that has to do with banking, right? But they know people, right? They're part of clubs, they're part of organizations. So that's a suggestion, because you may end up with a much more diverse, in every sense of the word, meaning education, sex, you know, male, female, you know, every other way. Plus, you may end up with a bigger pool, which I know that means you may have to do more interviews and you may have to do more screening, but the world, you know, life is so tough. And to be honest with you, that's a problem that I'd love to have. You know, a very diverse, well-qualified pool to choose from versus, you know, 3 or 4 people, and then none of them are really, you know, blows your socks off. So that's a suggestion.
Makes good sense.
Yeah.
So as we're currently under budget because of the challenges we have for COVID and the low rate environment, when we are under budget at year end, does that flow to the opportunity fund? What happens when I guess we're both under budget. I mean, basically in terms of the organizational expense, and not understand that, you know, if we're under budget because we have a reduced non-current receivable, right? If that just means we're just smaller, we're not doing as much loans, we're not borrowing as much money, you're not lending out as much. But with respect to fairly sizable, with the fact that we are understaffed, right, and it's unlikely we're going to be able to fill those positions, even though I think the commissioner's suggestion is a really excellent one. It's going to be unlikely we're going to fill those by year end. What happens to that money? That goes to increase our net position, but where does it go?
Hazim, did you want to take that?
Yeah, sorry, I was wondering what you're
I'm looking at Hazim.
Yeah, I know. It's like this whole like hybrid environment. So yeah, so what will happen is we will do a true up of all the accounts, and then once we finalize the numbers, you know, a portion of it will go to the opportunity fund and a portion of it will go to the ITA, the way that we establish it.
Yeah, while we're mentioning personnel, I did, see that the new position was created, Chief Operating Officer, that you're recruiting for, and did have the question if that had been in our budget that we had approved, but you have so much room, it seems like always. But will that be a variance, given that might be more highly compensated?
So the way that we established the budget was to set aside an allocation to pay for a certain number of FTEs. So in connection with a particular position, or if we require a specific expertise, then what would happen is, that may take a bigger bite out of the budget, and then we just have to then adjust. So we try our best when we go into a new calendar year, and then we try to determine, what type of assistance or, how we envision we would like to be staffed. So when we went into the 2022, we did set aside, certain, mid-level to a higher level management positions, but then we never really finalized because we were also dealing with trying to figure out, how to allocate those resources appropriately depending to the departments. So it's always been, one of those things where we know that we have the budget to pay for a particular FTE, but thereafter is more about, how do we then prioritize within that particular allocation?
I know over the last couple of years, we've talked about a refinancing vehicle to capture some of these people that we're losing due to refis. Is there any more progress on that, or?
It's more like a stop and go kind of thing. We that was one of the things that we were setting our sights on to expand our first-time home buyer program to include non-first-time home buyer program, and within that particular subset, we were envisioning rolling out a refi program. But as we were getting information from the ground, we realized that we should be focusing on trying to help first-time home buyers access or have them the ability to buy their first house. So one of the things that the board will hear this morning is a presentation from Lisa about a program relating to that aspect, which is to provide additional down payment to help them. So because of trying to, again, very similar to all the other stuff that we discussed about trying to manage priorities, we somewhat put the refi in the back burner just because we thought that we should, at least for now, focus our efforts in trying to help first-time home buyers.
Any other questions? Move on to John Chilson, Delinquency and Forbearance Report.
Good morning. For the month of March, the authority purchased 123 single-family loans totaling $26 million, of which 107 loans totaling $22.3 million were securitized, or 85% of the production. The remaining 16 loans totaling $3.7 million were whole loan. The average loan size was $212,000. The March month-end mortgage-backed security balance was $2.1 billion, which is a decrease of $493,000 for the prior month. The whole loan portfolio through February declined by 91 loans for $10.5 million, with an ending balance of $1.2 billion. The overall delinquency rate for single family decreased by 15 basis points to 2.57%. And the carrying balance for loans in foreclosure year over year decreased by $11.7 million to $26.2 million, while the number of loans in foreclosure decreased by 85. The authority also funded 85 down payment assistance loans totaling $1.2 million with an average loan size of $14,500, equating to 69% of our March borrowers taking advantage of the down payment assistance program. With regard to forbearances, at the end of February, there were 145 single-family loans in forbearance involving $107,000 of monthly P&I payments on a UPV of $17.2 million, or 1.3% of the whole loan portfolio. Even though of the 145, 22% of those borrowers did make a payment in February, even though they had been granted forbearance. In March, the number of loans in forbearance dropped by another 7 to 138. With regard to our multifamily portfolio, there were 3 new loan closings, increasing the portfolio size to 556 loans totaling $1.36 billion. There were, in terms of permanent loan delinquencies, there was a decrease of 2 over the prior month to 6, with one loan, one construction loan in delinquency. The overall delinquency rate for the multifamily portfolio is 0.5%, and there were no loans in multifamily and forbearance. Any questions?
No questions. We'll go on to the investment and swap report.
Okay, so this is our quarterly report to Finance Committee. In terms of the investment, it does reflect an increase in book value by approximately 155 billion to 3.6 billion, with a slightly reduced yield to 1.77%. And for the swap, the number of swap did increase by one to account for one swap that we entered into in connection with the 2022 Series A transaction that closed in March. So the total notional amount did increase by that swap of 15 million. In terms of the weighted pay rate, it did go down to 3.05 as we were able to take advantage what we got of a much lower swap rate during the first quarter of 2022. And as reported, due to the rising interest rate, our position did improve for the mark-to-market to about negative 71.3 million. So I'll be happy to answer any question regarding the investment and swap reports.
Any questions? The last item is the approval of the minutes from March 31st meeting. May I have a motion?
Moved.
Second,
Second.
roll call vote.
Jerry Abrahams,
Aye. Aye.
Alexander Dahm, Philip Tafronda,
Aye.
Timothy Hodges,
Aye.
Catherine McKinnon,
Aye.
Commissioner Perez,
Yes.
Sarah Sanders.
Aye.
The vote passes unanimously.
It may be my omission, but I'm, Phil, you're a new member to our committee. I'm not
Yeah.
sure we've met. Who put you on our board?
Minority leader. The
great.
yeah.
Oh, wonderful. Well, welcome
Yeah.
to the board.
Thank you very much. It's great to be here.
Do you have a connection to housing or a particular interest that you'd like to share?
Well, I actually own a mortgage company in Connecticut, and I think we're the third or fourth largest CHFA residential lender in the state, and we're passionate about affordable housing. So we are also the only independent person that participates with the Housing Development Fund independent mortgage company. But we're licensed up and down the East Coast, but we're headquartered in Connecticut.
Wonderful. Welcome to our committee. And
Here.
any other matters?
Phil, do you mind sharing the name of your company?
It's Norcom Mortgage.
Okay, very familiar with it. No, very familiar.
Oh.
Yeah, we're in Avon, Connecticut. So yeah, we're yeah, it's very good. And I was on the national board of the NBA, and I was chairman of the residential board of governors for the NBA. So if there's anything I can help out on a national basis, I'm here to do that also. So yeah, pretty excited to be on this. Being a lifelong Connecticut resident.
Yes. Wonderful.
Thanks, Phil.
Okay. Anyone else have comments for Phil or welcome?
I will
Okay.
for full
Yep.
disclosure, say that my wife is the executive director and general counsel of State Information, so I have to all of information free. So it's so
Interesting background.
yes.
Okay. Anything else? I'll entertain a motion to adjourn. All in favor, say aye.
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 Okay, see you at the board.
Yeah.
Yeah.